Everyone, and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Strong U.S. jobs market data fueled optimism for economic growth and heightened interest rate anxieties at the same time. And in Europe, record low jobless rate also suggested that the euro area may avoid a recession. We begin with the review of the U.S. economic data. The U.S. economy added jobs at the fastest pace in September since January after employers in hospitality and healthcare and governments at all levels added jobs above annual rates. Non-farm payroll additions in all levels of government and private sector soared 336,000 in September, the U.S. Bureau of Labor Statistics reported Friday. Moreover, employment in July and August were revised higher by a combined 119,000. The surge in employment reflected the widening demand for employees in the service sector. Jobs rate in the month increased to 3.8%, and average hourly wage rose 0.2% from the previous month and jumped 4.2% from a year ago. Despite the surge in hiring over the last 2 years, the labor force participation rate has remained nearly unchanged, indicating a steady and elevated level of employees retiring or choosing to leave the labor force. Both the labor force participation rate at 62.8% and the employment to population ratio at 60.4% were unchanged over the month. The number of job openings rebounded in August, and the openings rose in professional and business services, financial services, and federal, state, and local governments. The number of job openings increased to 9.6 million at the end of August, the Bureau of Labor Statistics reported Tuesday in its JOLT report. The U.S. international trade deficit in August dropped to the lowest level since March 2020, after exports rose to a 5-month high and imports fell on weaker demand for cell phones, semiconductor chips, and petroleum products. Exports in the month rose 1.6% from the previous month to $256 billion, and imports eased 0.7% to $314 billion, resulting in a 9.9% decline in trade deficit to $58.3 billion, the Bureau of Economic Analysis reported Thursday. We now review economic data from Europe. The euro area retail sales declined, jobless rate fell to a record low, and wholesale inflation fell at the steepest place since record-keeping began in 1995. The euro area retail sales in August decreased 2.1% after falling at a rate of 1% in July, Eurostat reported on Wednesday. Weakness in fuel prices compared to a year ago dragged overall retail sales lower. Wholesale inflation in the euro area plunged at the fastest pace of 11.5% since record-keeping began in 1995. Job market conditions remained tight in the euro area, and jobless rate declined to the lowest level since record-keeping began in 1995. The seasonally adjusted jobless rate in the euro area decreased to 6.4% in August from the upwardly revised 6.5% in July, Eurostat reported Monday. Jobless rate in August a year ago was 6.7%. The number of unemployed people decreased by 107,000 from the previous month to 10.86 million. In another report, Germany's trade surplus widened to 16.6 billion euros in August from 15.9 billion in the previous month, the Statis reported Thursday. Most exports outside the European Union went to the United States, and most imports came from the People's Republic of China. Exports to the United States fell 1.3% to 13.3 billion, and to China increased 1.2% to 8.4 billion, and to the United Kingdom fell 4.2% to 6 billion. Imports from China declined 2% to 13.0 billion. From the US fell 13.1% to 7.6 billion, and the UK dropped to 3 billion. In another report, the Germany's factory orders adjusted for seasonal and calendar factors in August jumped 3.9% from the previous month, and rebounded from a sharp fall of revised 11.3% in July, the Statista reported Friday. The sharp increase in German factory orders suggested healthy demand for domestic and foreign orders. UK home prices continue to decline for the fifth month in a row, according to data released by Halifax, a division of Bank of Scotland, on Friday. The average home now costs £278,601, a drop of around £1,200 since last month, but remains £39,400 higher than in March 2020, reflecting a sharp jump in home prices since the pandemic began. A separate report released by the Nationwide Building Society also indicated weakening in home price trend, but prices are still elevated. We now turn our attention to Asia. In Asia, interest rate decision from the Reserve Bank of India dominated headlines. The Reserve Bank of India held rates steady and cited demand for services and a revival in rural demand, consumer and business optimism, and the government's push for capital spending is likely to keep demand conditions positive. The Reserve Bank of India held its repo rate at 6.5% for the fourth time in a row, the central bank said after the conclusion of two-day meeting. The RBI also maintained its economic growth projections for the current fiscal year at 6.5% and consumer price inflation at 5.4%. Financial markets in the U.S. halted month-long slide. European markets extended weekly losses, and markets in China struggled. We now review the financial markets a little bit closer. The U.S. Treasury yields rebounded to multi-year highs after U.S. employers added jobs at a brisk pace in September. The S&P 500 index and the NASDAQ composite halted four-week slide after investors focused on resilient economy and overlooked worries of higher interest rates. Crude oil extended its week-long slide to 10% on global demand growth worries. European markets extended losses for the second week in a row on growth worries and interest rate uncertainties. The euro extended losses for the 12th week in a row on rate path worries. The yen declined to an 11-month low and fell to the level not seen since 1990, prompting fears of a government intervention after the currency briefly traded above 150 against the US dollar. Gold extended weekly losses and dropped to the level last seen in March on the worries of higher US interest rates. Stock markets in Europe turned down for the second week in a row after global bond yields advanced and the euro drifted lower. Stock markets in Japan fell for the third week in a row after global bond yields advanced and the yen dropped closer to the level that raised the prospect of a government intervention. Market indices in India halted two-week slide after the RBI held rates steady and reiterated its economic growth outlook. We now review stocks that led the gainers list. Intel Corporation said it plans to operate its programmable chip division as a standalone unit in preparation of a public offering in the next 2 years. Cruise lines operators sailed higher after the futures of crude oil extended week-long losses. Point Biopharma soared 84% after the company agreed to be acquired by Eli Lilly for $12.50 a share in cash or $1.4 billion. Macy's Inc., the department store chain operator, said it plans to open 30 smaller stores in strip malls over the next 2 years and look for expansion outside the traditional malls. BAE Systems plc, the UK-based defence contractor, won a £4 billion submarine contract from the UK government as a part of the AUKUS program with the US and Australia to build attack submarines. Volvo AB and Renault announced a plan to form a new company to make electric vans. Metrobank Holdings soared after the UK-based bank initiated talks to sell £3 billion of mortgage loans it held in its portfolio. The stock is still down 67% in the year so far. We now look at the stocks that led the losers list. Philips declined after the US FDA said the Dutch medical device company's recall of sleep apnea products fell short of the agency's expectations. Levi Strauss and Company decreased after the apparel maker reported third quarter revenue below market's expectations, and the company lowered its full-year revenue outlook. Rivian Automotive dropped after the electric vehicle maker said it plans to raise $1.5 billion through a sale of convertible bonds. Clorox Corporation dropped after the company forecasted weaker than expected fiscal first quarter outlook and said that the recent cyber attack has wiped out all the gains from price increases and supply chain improvements. Cal-Maine Foods plunged after the egg producer reported sharply lower sales in its latest quarter after conventional egg prices plunged. Alstom plunged 35% after the French retail transportation company lowered its free cash flow target because of higher production costs and delays in new orders, and the company is still struggling to integrate its recent purchase of Bombardier Transportation acquisition. McCormick and Company dropped after the spice maker reiterated flat net income in 2023 compared to a year ago. We now review economic releases in the week ahead. Looking ahead on the economic front in the United States, the focus will be on the inflation report for the September month, and the CPI is estimated to rise 0.3% in September. In Europe, the ECB is set to release its minutes of monetary policy meeting on Thursday. Also, the CPI reports are expected to confirm a significant weakening of inflation in Germany to 4.5%, while France is expected to maintain its elevated inflation at 4.9%, but still ahead of 2% target set by the ECB. In Asia, China is set to release its international trade data. India is expected to release a weakening of inflation, and Japan is scheduled to release its current account data. You can read daily U.S. and global market updates, stock movers, and economic updates on ticker.com.